We are going to prepare the wages for Una Green. Una commences employment in week 1 of the tax year. She has no P45 and no PPS number. We are given details of her gross pay from weeks 1 to 4, and we're told that from week 5 onwards she will earn €500 per week. Her employer receives a cumulative tax deduction card in week 5 with tax credits of €70.38 and a standard rate cut-off point of €700 per week. What is going to happen is we will prepare Una's pay from weeks 1 to 4 of the tax year on an emergency basis, and in week 5 we will transfer the details from her emergency tax deduction card to her cumulative tax deduction card, and in week 5 recalculate her pay to date on a cumulative basis. Because Una has no PPS number, we must prepare her tax deduction card as follows. For the 4 weeks, she will have no standard rate cut-off point and she will have no tax credit. We then process the wages for week 1. In week 1, she earns €500. Because her standard rate cut-off is nil, all of her €500 is going to be taxed at 41%. By multiplying 500 by 41%, we get tax at the higher rate of €205 and a gross tax or a total tax to date of €205. We take away the nil tax credit, which means the tax deducted in this week is €205. In week 2, she earns €450, which is all taxed at 41%. We multiply 450 by 41 to give us €184.50, given a total gross tax. We take away her tax credit of nil, giving us tax in this week of €184.50. In week 3, she earns €650, which is all taxed at 41%, giving us tax of €266.50. And that is the total. We take away her zero tax credit, which means the tax payable in this period is €266.50. In week 4, she earns €585, which is all taxed at 41%. By multiplying 585 by 41%, we come up with a total tax figure of €239.85. We take away the zero tax credit, which means the tax deducted in this week is €239.85. In week 5, we receive her cumulative tax deduction card. But before we move on to that, we must transfer her gross pay to date, which is €2,185, and we must also transfer her tax, which totals €895.85. Both these figures need to be transferred to the cumulative tax deduction card. In week 5, we start operating the cumulative basis. We transfer her gross pay to date into the cumulative gross column at week 4, and we also transfer her tax to date in the cumulative tax column. Please note that both these figures are transferred from the emergency tax deduction card. In week 5, we process her wages for this week, which is €500. When we add that to her previous earnings, the gross earnings to date is €2,685. When we compare it with the standard rate cut-off point, we can see that all her gross pay to date will be taxed at the standard rate of 20%. So by multiplying €2,685 at 20%, we get €537, giving us a total tax of €537. We take away her tax credits to date of €351.90, which gives us a cumulative tax to date figure of €185.10. In order to find out what the tax is for this week, we need to subtract her cumulative tax to date figure from what she's previously paid in tax. Because the cumulative tax to date figure is lower than what was previously paid, Una is going to be due a refund, and this is got by subtracting 18510 from 89595, which means she's entitled to a tax refund in week 5 of €710.75. This would be usual when somebody moves from an emergency tax card to a cumulative tax card. You would expect a tax refund in the first week that you operate the cumulative card. In week 6, we process another €500, giving gross pay to date of €3,185. Once again, it's less than a cut-off point, which means all the cumulative pay to date will be taxed at 20%, giving us a tax figure of €637. We then take away the cumulative tax credits to date, which gives us a cumulative tax to date figure of €214.72. In order to get the tax for this week, we subtract the cumulative tax to date from the previous tax to date, which gives us a figure of €29.62. If she continues on the cumulative basis, earning €500 for the remaining of the year, her tax will follow suit and be €29.62 each week.